Hey folks, and welcome back to another video. If this is your first time with us, my name is Alex. I'm that Hawaiian guy here helping you folks out there in YouTube land build a strong and safe stock portfolio. Here on this channel, we like to discuss matters that happened in the past in the stock market, issues that are going on right now, and where do we see the stock market possibly heading in the near future. In today's video, I'm going to go over 5 top stock picks that I have for you for the week. These are all non-cyclical companies, as well as one bonus kind of non-cyclical growth company. So we're going to talk about 6 companies as a whole. Like always, when I give my stock picks, I like to show a portfolio that we've been building together since May of 2020. Small disclaimer, if you clicked on this video because you're looking for some stock picks that are going to make you rich tomorrow, next week, next month, or next year, perhaps this is not the right video for you. On this channel, we like to talk about companies that are very well established with great track records, really high quality companies that will grow over time. If you're looking for those type of companies that are going to make you rich tomorrow, those kind of Reddit speculative type stocks, this might not be the right video for you. But if you're looking to build your stock portfolio in a safe manner and have about, let's say, 10 to 15% growth annually, this is definitely a video you want to check out. Without any further ado, let's get right into it. All right, without any further ado, let's get right into the video. So today we're going to talk about where do I think the economy is heading in the near future. Full transparency, when I give you information on this channel, this is not solely my opinion. I always go out and kind of research as much as I can before I actually make these videos. And in today's video, a good portion of the conversation we're going to talk about, at least in the first part of the video, is coming from a billionaire hedge fund manager, Bill Ackman. I was watching an interview he had on NBC Squawk Box. And I know that's kind of geeky, and a lot of you guys thinking, dude, seriously, you watch Squawk Box? But if you want the information that's going on in the stock market, those are the kind of shows you have to watch. And I want to read the comment that Bill Ackman said during his interview. I'm going to read it verbatim. So he said, the spread of the Delta variant doesn't pose a significant threat to the economy reopening, and he doesn't really see it as a huge problem. He went on to say that, I hope what it does is to motivate individuals who haven't got the vaccine to get the vaccine, but I don't really see that this will have any type of real effect in the stock market in the coming days. When I was listening to him, I kind of remembered one of my old econ teachers, and he was talking about Mark Twain. Full transparency, I don't read Mark Twain books. And if you guys are into Mark Twain, no offense, I mean, I'm sure he's a great author. It's just not something that I typically read. But he did make a comment he made a quote that I really liked, and he said that it's difficult to make predictions, particularly when you're talking about the future. And when my teacher said that, I'm thinking in my mind, it's difficult to make predictions, particularly when you're talking about the future. That is just, I love that. And that has stuck with me for the last 20 or so years. So a lot of times when I see individuals making predictions about the stock market, where we're going, I kind of take it with a grain of salt, because they do exactly what I do. They're kind of looking at what's going on in the environment and taking an educated guess. But by no means, please don't go on those sites like Reddit or Quala or Cinnamon or whatever those different sites that a lot of individuals use. And when people tell you this stock is going to be fire, put as much money as you can. I personally would take that information with a grain of salt. What I like to do is look at great quality companies with great track records that will build over a period of time. If you really want to build a strong portfolio, don't look at it as a 2-year thing or a 3-year thing or even a 5-year thing. When you invest in the market, this is a marathon. You're looking at 20, 30 years. That being said, if you are under the age of 30, you're going to invest far different than if you're an investor over 30. And what I mean by that is, when I was younger, I was a lot more aggressive in the type of risk. The risk tolerance you have is quite different when you're 21, 22, 23, because you have a lot more time to recover. But once I say that golden peak is maybe around 30, maybe 30 to 35, is when you're actually saving towards your retirement. Because if you start at 30 seriously in the stock market, that 25 years is going to put you about 55 years old, which is where a lot of people would like to retire. That's definitely where I want to retire. So if you're under 30, you can invest a little bit more aggressively. But the companies we're going to talk about today are far more geared towards those individuals who are a little bit more conservative, companies that have been around for a long time, great track records, and actually all of the companies we're going to talk about today, except for that one growth company at the end, are all dividend paying stocks. So you're not going to see huge growth from these companies, but they are great non-cyclical type companies with a very great track record. Now, before I talk about these five non-cyclical stocks and then one kind of growth stock, I do have to let you know, whenever you're building your portfolio, diversity is one of the most important things. And what I mean by that, you don't want to just load up your portfolio with all tech stock. You need to have some tech, some consumers, some consumer staples, some finances, some utilities, some minerals, some oil, some gas. You need to have even real estate. I really don't like real estate, but I do dabble a little bit. But you need to have a really diverse portfolio. So some of the stocks we're going to talk about today, it might not be your cup of tea, but I'm just giving you information, kind of food for thought. So our first stock pick for today, the Philip Morris International Inc. Ticker is PM, just simply PM. Prior to making this video, they were trading about $96.54. Philip Morris, they trade outside of the United States. And I know if you're watching this video and you're in the States, the trend of smoking is really going down. But if you leave the United States, there is many countries, particularly in Asia, who is puffing like you wouldn't believe. And I know here in Canada, a pack of cigarettes is about, I don't know, $16-17. I'm not sure what it is in the States right now, but I know if you're in Japan, you can get a pack of cigarettes for about $2.75. And if you head over to China, Indonesia, or Korea, same thing. Cigarettes are really cheap in those countries, and a lot of people smoke. Keep in mind, there's 1.6 billion people in China, and there's only about 370 million people in America. So they have about 4 or 5 times more people in China, and don't quote me for the exact number here, but I'm going to just go out on a limb and say at least 50% of those guys over there are actually smoking. So 50% is still double the population in the United States. Am I telling you have to invest in Philip Morris International Incorporated? Of course not. But what I am giving you is food for thought. Perhaps you don't have this sector in your portfolio, and it might be something you're interested in. And one great thing is the Philip Morris, their dividend yield is about 4.1%, and they do pay quarterly, and they pay about $1.17 quarterly. So this is just passive income, just for holding stocks in that company. So you're making almost $4.60, $4.70 per share annually, if you think of it on an annual basis, just for holding shares in that company. So think of it, you had 100 shares in Philip Morris, you're making about $420, $430 annually just for holding shares in that company. That's not bad. That's passive income. Keep it on your radar. Philip Morris International Incorporated, ticker PM. Now, I do not have Philip Morris in my portfolio. I only have, on this list, I have I have 3 of the companies in my main portfolio that I have actually bought. The other 3 companies I did not buy, but they are still great companies. And the second company we're going to talk about, I did purchase these guys, but in the way back machine. I've had these guys in my main portfolio for at least 15 years. Full transparency, I have their counter, their kind of rival company in my portfolio as well. And the company I'm talking about is Pepsi Cola, ticker PEP. Prior to making this video, they were trading about $155.24. And I do actually own Coca-Cola as well, because I can't tell the difference. But Pepsi is a company that, I mean, it's just like Coke for me. I mean, it's a great company. It's been around for 100+ years. Right now, their dividend yield is about 3.1%. Again, they pay quarterly, and quarterly they're paying about $1.07 per quarter. So again, just for holding shares in this company, you're going to make about $4.40 annually just for having shares in this company. And it does grow. These companies like Philip Morris International, as well as PepsiCo, these companies are not like huge growth companies, but if you're looking for that passive income with some very safe, stable companies, these are great if you're maybe over the age of 30 or 35, because you're really trying to build up that passive income. Now, in your portfolio, you don't want to have 100% of dividend. I mean, you could if you want to. I'm not telling you what to do, but you need to have a good balance. For me personally, I keep about 50 to 60% of my portfolio as far as like that non-cyclical, a lot of dividend type stocks, but I do have about maybe 30 to 35 in growth, and then about 5% in that speculative where I invested in Ethereum. I know it's going to come back up. It's not going to be tomorrow. It's not going to be next month, but I have great faith in Ethereum, which is why I put about a little bit more than 2% of my portfolio into Ethereum. That's for another video, another day. And the third company that I have for you, this company I also have in my portfolio, and I've had this one for years as well. And again, when I'm talking about those non-cyclical stocks, these are companies that are going to do well no matter what market is out there or what economy is out there, because it doesn't matter if you don't have any money, if you have a little bit of money or you have a lot of money, these companies I'm talking about today will always do well, which is why I like those non-cyclical stocks. And the third company I have for you is Colgate-Palmolive Company. Ticker is CL. Prior to making this video this morning, they were trading about $82.18. I'm sure most of you guys are familiar with Colgate or Palmolive, the dish soap company. Basically, the consumer products that they just sell all over the world. I mean, you get this toothpaste and this dish detergent, and they have a slew of other products that they also produce as well. This is a really, really great company. Prior to making this video, they were trading about $82.18. Palmolive, they have a dividend yield with this company of about 3% or about 43 cents per quarter. So again, you're not making as much in passive income with this particular company, but you got to look at the price to buy in is actually less than a company like Pepsi. You bought in at Pepsi at $155, and you get about $1.07 quarterly, whereas this company, it's almost half the price, so you get almost half the dividend. So again, Colgate-Palmolive Company, ticker CL, trading about $82.18. They have a dividend yield of 3% and a quarterly payout of about 43 cents. Now, the fourth company we have on the list, this is not a company that I have bought, but it's still a really great company. You might not know their name, but you've definitely probably bought some of their products. And the company I'm talking about is Flowers Food Incorporated. Ticker is FLO. Prior to making this video this morning, they were trading about $23.78. So this is a great company at a really fair price. Their dividend yield is about 3.4. Now, even though dividend seems higher than the other companies, you got to consider the price of the stock is far less at $23.78. So if your dividend yield is only 3.4% of $23.78, I know that's a lot of numbers, but the point is you would get a quarterly payout of about 21 cents quarterly, or if you think about it annually, about 84 cents annually with this particular company. And the fifth company I have for you, I bought this company, I actually bought it and sold it. So I do not have, full transparency, I do not have this company in my portfolio anymore, but I did purchase it many years ago, and I kind of stumbled across it a couple months ago, and I was actually thinking about buying back in. And this is actually a rock star utility company. And the company I'm referring to is American Water Works. Ticker AWK, trading about $163.49. This company's market cap is about $29.6 billion with a PE ratio of about 41.3. This is an amazing utility company, the largest publicly traded water and water waste utility in the States, in the United States. It makes most of its money by providing regulated water and wastewater services to the regular public, the residents, as well as to the military. This is actually a really great company if you don't have the utility sector in your portfolio. And this company pays about $1.61 annually. I don't think they pay quarterly anymore. This company, when I researched it, actually paying annually of about $1.61 per share. This is an amazing company that actually seen some really great growth, and it is the largest water utility company in the state. So this is definitely one to keep on your radar. And the sixth kind of bonus, this is not a non-cyclical, this is more of a growth, more of a cyclical type of company where it really fluctuates depending on what's going on in the market. And typically I don't like to buy restaurants. And I was actually chatting with, or kind of texting with one of the viewers where I was noticing that Chick-fil-A was just, booming all the time. But I didn't realize that Chick-fil-A is actually a private company, and they don't actually they're not actually listed on the NASDAQ or the New York Stock Exchange, so you can't actually purchase them. But the company that I did notice, and I bought a little bit about 2 or 3 weeks ago, and the company I'm talking about is Ruth Hospitality Group. And that name you might not be familiar with, but the company I'm talking about is Ruth Chris Steakhouse. First of all, their ticker is RUTH, trading about $21.32 prior to making this video. This is not a dividend paying stock, but it is a growth stock with great potentials where experts are estimating that this stock is going to see a 10 to 15% growth for the second part of 2021 as well as heading into 2022. Again, take it with a grain of salt. No one has a magic crystal ball and can see where the market is going, but a lot of the analysts out there are saying this company is poised to do quite well in the future. If you guys out there have some stock picks for me, please, I really do want to hear about it. I mean, a lot of the times I get tips from you guys out there in YouTube land kind of tell me, yo, Alex, take a look at this. And actually, sometimes the tips that I get from you, I actually do put in my portfolio. So, hey, big ups. Thanks for that. And if you haven't subscribed to the channel, I really appreciate it. If you guys hit the subscribe button, become part of my family. Until I see you next time, aloha.